And we're back. Brian York, how the heck are you, buddy?
I'm doing great, Neal. How are you?
I'm happy to be babbling with my fellow brokers again. It's Monday. It's always good to catch up after the weekend. How was your weekend?
Yeah, it was busy but really good. I
Yeah.
was actually thinking today. I was like, wow, the temperature finally broke. It's only 84 degrees today, so that's a cold snap, huh?
Yeah, I know. And it's like rainy and it's hot and it's that beautiful late August weather. Well, I know we're trying to close 2 deals this week, so we're keeping the transaction attorneys on their toes, but that's good, right?
Very good. Always exciting when we close deals.
I had a call today. So I'm going to skip the introduction. I think people know you're you and I'm me. I want to tell a quick story. On a call today with a guy owns a restaurant, and talked to him for years, ready to sell. Had a heart attack. He described it as a widowmaker type event, and he told me he was in the hospital and he looked at the x-ray machine and he said, "Is that what I think it is?" to his doctor. And I was like, "How did you know that you had a heart attack looking at the x-ray thing?" And he's like, "Well, before I owned restaurants, I was a medical guy."
Oh, wow.
I'm like, wow. Imagine if you're like diagnosing yourself through that. So that's part of the fun of this business, is you really get to know people on a personal level. Like, you understand their whole life story by the time they go through these different inflections of their life.
Yeah, the one thing I've learned with being with you as long as I have at this point is a lot of our clients become good friends. That's for sure. By the time we're done selling one of their largest assets, or their baby, if you will, like you said, we get up close and intimate, and it's always nice to get to the finish line, but it's nicer to always grow our circle of friends.
Yeah, because we start with confidentiality, and they can't tell their employees, and their spouses don't want to hear about it.
That's right.
And so we're talking to them all the time, and then they're just like, "Hey, I got this other thing going on. Let me tell you about that." Just because, it's a good thing. It's a good thing. Well, I do have a tip of the week. I'm excited about Mike. So I'll halt the babbling for now, but I do have a tip of the week. Let's go ahead and play our quick tip video, and then we'll talk about that. The bank had a lawyer, the landlord had multiple lawyers, the buyer and the seller each had attorneys. All of those attorneys really can't talk to every principal in the deal, but I could. So it's my role just to say, "Hey, we're stuck here. Buyer or seller, help me fight this fight, because the ball's in our court right now." That was my role in the whole process. Where are we stuck? How can we push it forward? We all have the same goal. We, as the buyer and seller team, did weekly or every other week meetings for most of this process. And it took several months. But we got it. All right. So I like that quick tip. I think the quick tip is, it takes a lot of communication to get these deals done. Yeah. And I don't think people realize that when you have, buyer and seller and lawyer, the intermediary is really the only one who can talk to everybody, because the buyer's attorney can't talk to the seller and vice versa. How much of your day, Brian, is like going in between and connecting the dots?
Well, I definitely feel like we're quarterbacks. That's for sure. Yeah. Definitely, we're the ones who are gently nudging people to, pay attention for a minute to us and kind of keep the deals flowing, because there's so many different parties involved that really all day is basically, to answer your question, that's all I do all day. Yeah. During normal business hours, when it is okay to be calling people, that's what we do.
Yeah. And so I would say, the other quick tip behind the quick tip is, if you're thinking about selling your business yourself, which people do, ask yourself if you have time to do all this nudging and run your business. Because I guarantee it's a lot more stuff than you could ever imagine. People aren't just going to go and do what they say they're going to do. You got to stay on top of that stuff. So sometimes it's helpful to have somebody in the middle there. And then the deal of the week, let's look at that. I'm excited to feature, and I don't have the banner up, but our classic and sports car dealership has had a price improvement. It is $150,000. They're doing $150,000, $125,000 in cash flow. So, I can't do that mental math. 75%. Get your money back in 9 months, essentially, if you run it the way that the previous owner has run it. So They did 700 grand in the trailing 12 months, 80,000 in furniture, fixture, and equipment. So this is a great opportunity for somebody that's maybe a gearhead or is looking for a built-out dealership. Pretty rare opportunity. We may even do an open house. I'll put the link in the chat if you want to learn more about that. But that's a pretty unique one. I'm excited about that one. That's a Rory McDermott deal if you want to learn more about that. So I will go ahead and put that link right here.
Yeah, calling all car enthusiasts.
Calling all car enthusiasts. That's right. That's our deal of the week. I'm excited to feature more deals of the week soon. And any more business before we jump into our guest introduction?
No, I'm really excited to bring Mike on. I think our audience is going to learn a great deal about business evaluations, and so I'm excited to get him on the show.
Me too. So I'll do my introduction of Mike, which is easy for me to do because I've done a lot of work with Mike personally, and you've seen his work, Brian. I mean, this is kind of a tag team duo. Brian, you and I are both valuation experts, so why would we bring in another valuation expert? Because Mike doesn't sell businesses, and it's nice for owners to have a third party in the deal like this when they want to know the value, and they don't want to know it from somebody who has no intentions to try and sell their business. So that's one reason why it works really well for us to work with Mike for valuations. And his company's the Business Value Strategies Group, but he does more than just valuations. He does consulting. The people, sometimes we say, do you want to go or grow, right? And the valuation will determine which path to take. And we're the path to go if you're ready to go. And Mike is the path to take for those owners who are ready to grow. And he comes with lots of experience doing just that with his own businesses. And so with that, I want to welcome to Brokers Babble, Mike, Leannah, everybody. Welcome, Mike.
Well,
how are you, my friend?
Thank you very much. I appreciate the opportunity to speak with both of you today and to have this conversation, because it is, it to me, valuations are an exciting part of business because, like you said, do you want to grow and go, or do you want to go? And there's actually gives the business owner an opportunity to look at both ways.
I agree. Well, so valuations are important. I gave my introduction, but Mike, tell us a little bit more about you. How did you get here? What did you do before? Give us an introduction.
Well, I appreciate it. I've had over 20 years experience in the M&A field, M&A work. And on our 25th wedding anniversary, my wife said, "What's wrong?" "Well, I'm gone Monday through Friday. It's no longer fun." She said, "Quit." And I said, "Well, what am I going to do?" She said, "Well, go buy. You bought companies for other people. Go buy one for us." And I did. And so we bought a company. We had it for a 10-year period. And since then, been CEO for a couple of different firms and worked for a private equity firm. Grew that business from 5 to 7 million, and then had an opportunity. I said, in order to take it to 10 million, let's go out and buy. And that's what I did. And at that point, I looked at the people that that I was buying, which are business owners, and said, you know what, I want to get on the other side of the table and help them understand what they have and what they can do with it and what the real value is to them. Because, as you know, business owners work in their business. They could be in their business 20, 25 years or 30 years. And they're so involved in their business, they really don't know the value it is to somebody else. And that's the real value when you do valuations.
I agree that outside opinion is so important, and people take it personally. I know we're going to get into that a little bit. Like, we joke about how we present these values, and we have the asset and the enterprise and the liquidation. Like, we need to have the owner's impression value, which is 10x, whatever the highest number is. People, it's worth the most to the person who built the business 100% of the time.
Yeah. I mean, they're emotionally tied to it. So of course it has, it's just like, it's their kid, it's their baby. Yeah. And, since that is their baby, they are emotionally tied. So they're looking at it. It has more value to them. And a lot of them, and I know you've come across, well, somebody else could do this with that. So I need to get paid for that. And that's really not part of the valuation process.
Yeah.
that's part of the education I know that you and I have done with clients to help them understand. And again, I come from a third party perspective, and I come from from a buyer's perspective.
Yeah.
And I usually start that conversation with the client. I'm coming from a buyer's perspective because that's what you need to know.
Yeah.
It's not what you think it's worth. It's what the buyer thinks it's worth.
Yeah, I agree, because ultimately it's the market approach, and the buyer's perspective is kind of the markers of that is the market approach, is the buyer's perspective.
Right.
It's subjective what the owner wants for it. It's very objective what buyers would pay, and it's what's the market pay for this business.
Right.
Well, I touched on it a little bit, but tell me, like, why you kind of mentioned it, but the why you like to do valuations, and how did you end up settling on this specific niche? I mean, you built and sold and stuff, so why did you end up doing this flavor of work in particular?
Well, I wanted to do this because to me, I like to start it with valuations because that now gives everybody a baseline. Right. And the baseline could be, I want to sell it for this amount, and that's fine. And that's where you guys come into the picture, and you can sell it. I don't. Whereas, but if someone wants to say, hey, that's not what I need out of the business, then I work with them and find out, okay, what do you need to get to where you want to be retirement wise, if it is retirement or investment purposes. But so then I help them understand, okay, if this is the value today and you want X out of it, how do we get from point A to point B? Yeah. And I've been involved with business, so I know the value drivers that a business owner can install in their business that will create value for a buyer. And that's the perspective I can, I bring to the table with them is these are the value drivers that somebody's going to be willing to pay for.
Yeah. And that's where the consulting piece and the objective reference points come in, where you know what could work, what could drive it. And we had an EOS guy, Carson Clark, come on last week or a couple weeks ago, and kind of talked similarly about this. And he had an interesting private equity. You've done some work with private equity, like what do big buyers look for? Like, this is where you need to get to. So it's a framework that is pretty proven.
It does work, and it does work, and you're right. They're different buyers with different reasons to buy, which does have an impact on the valuation. Because again, what do you have, and what does it mean to somebody else? And that's really what a seller has to understand. What does it mean to somebody else? And what do I have in my company that creates value for the buyer? In other words, if you're looking at a buyer that wants to buy a business but doesn't want to be involved in the day-to-day, do you have a management team in place? Do you have processes in place? Who has the customer relationship? If it's the owner and he's leaving, well, now you got a risk factor which impacts valuation. Who has the vendor relationships? If you're buying product which could have an impact on the cost of goods sold, who has that relationship, and how long has it been there? Whereas, when I had the company that I bought, I knew, and it was a small company, and we grew it. And what I knew was, I said, okay, I need to have, at that time I said I need to have a VP of ops, a VP of business development, a CFO, and it was a construction company, and an estimator, because that's who I was selling. It wasn't going to be me and the relationships I have. It was going to be those four people and the relationships that they have, because that was what was going to create value for me as an owner.
More now than ever, the team, as it gets harder and harder to build teams, the value of the team, which is interesting because we don't see team members on the P&L. We might see salaries,
right?
But we don't have an org chart on the P&L or even the tax return. But that is vital.
Yeah.
But do you ever look at benchmarks and say, well, you're spending, 10% on labor and your peers spend 30% on labor. So you must be overworking yourself. I mean, do you go there when you're looking at these deals?
I do go into some of the details, and I try to understand what they're doing, and I look at percent. I do look at it because I like percentages, because that tells me a lot. And I know some of the owners said, "What are you talking about?" I said it's all about percentages. I said, you look at your cost of goods sold percentage, you look at your labor percentage, you look at your material percentage. All of those have an impact on the cash generated by the business, and I look at that cash generated by the business. So all of that has an impact. And again, I know I've had clients that come in and say, we've never thought about business that way, and I said that's okay, and I understand that. But in order to maximize your value, here's how somebody else is looking at it, and therefore, if you install these types of things, you will create the value that you're looking to get out of it.
Yeah. And you mentioned they want to retire or whatever, and I've brought some for us to work on together, and I know how they come to us. But I'm curious for you, like how are these people? Why are they pursuing valuations when they get to you? What stage are they at? Are they getting unsolicited offers? Are they planning? Are they ready to set? Like, where are they when you reach them?
They're all over the board. I've had some young, some people in their 40s that have come to me and said, hey, I want a valuation, and actually sold. And I've had some that were in their 40s and say, I want to grow my business. So, and then I've had people that, hey, I want to retire. Maybe I want to retire in 3 years or 5 years. But I want to know what my business is worth today. If someone comes to me and says, hey, I want to sell in 6 months, I give them to you, because I can't do anything to help them increase the value. So it is the value, whatever it is, it is.
Yeah.
And I can identify what that is. But if they're looking to increase it, I've got to have some, they got to have some time to do that.
And if they say, I want more, I send them back to you.
You're right.
Hey, Brian, did you have any question? I got plenty of questions for Mike.
I do have some questions. So Mike, one of the things I realized that people get valuations for different reasons, not only just to buy or sell, but for insurance policies, for maybe like an ESOP plan or legal disputes, things like that. Can you tell us, are all valuations created equal? Meaning, is the value the same on each valuation type? So if I was getting it for insurance policy purposes or the other options that I mentioned, which I did a little bit of research, so I did some homework before we met today. And just out of curiosity, if you got asked to do a valuation based on a different circumstance, if it wasn't necessarily a buy or sell, or say financing, for example, are all valuations looking at the same thing, or do some of them slightly differ depending on what the valuation is?
It does differ a little bit, so there is some differences depending on what the valuation is for. And there's different types of valuations. I don't have certified valuations, so there's some people, but you're going to spend, 6 or 7 times what I would charge. My valuations are down to earth. I'm going to come within a reasonable percentage of the value. But if someone's doing it for legal work, then they need to get a certified valuation, which is, a lot more comprehensive, a lot more costly. But for legal purposes, that's what they may have to have. And I don't do that type of work. I get it to where it's within the reasonableness, because everybody's going to look at business differently. Neal's going to look at it one way, you're going to look at it another way. And if you were buyers, you're going to look at it and say, well, Neal says it's worth X and you say it's worth that. Well, and they may not be they be close, but not, there's nothing that says, hey, this is a guaranteed number. It's within a reasonable expectation is how I phrase it to clients. Mm-hmm. Does that make sense, Brian?
Yeah, it sure does. Thank you.
And we have learned that state estate attorneys seem to be find the valuations that you do to be sufficient for the purposes that they need, which is interesting. But I know we shy away from any type of contentious type things where the owners are one of the owners is holding back information.
Yeah, and you can tell pretty quickly when you start asking for information and it's difficult to get.
Yeah. Well, how about speaking of different values that people put on stuff, like, how close do you think owners' values are to when you present that number? How many people say, "Oh, that's twice as much as I thought it would be," versus that look that owners give? Talk to us about.
I can tell you this: I've never had any owner that tell me it's twice as much of what they thought it was going to be.
Yeah.
It's usually the opposite. It's about half a month of what I thought it was going to be, and not necessarily so, but because owners are tied to it, they think the thing is much more valuable than what it is. And when I sit down and talk to them and kind of go through the process and go through the different types of valuations, I know we talked briefly about an asset purchase versus an equity purchase versus enterprise value versus liquidation value. Those are the values that we do give them, but people don't understand the difference. Well, what does that mean? Well, I want the biggest number. Well, that's not the, that may not be the right answer. It's, it depends on how they sell or what they sell.
Yeah.
And, so I think owners, typically they have a higher value than what I give them.
Yeah.
And sometimes they'll say, well, okay, it was within the range of my expectation. And, that's nicely telling me, well, it's less than what I really wanted, but okay, I might have to live with that.
Yeah.
You know how they are.
I do. I knew the answer to that, but I wanted you to answer it. I've got some kind of off left-hand questions. But Brian, if you have more, I'll let you ask first.
Yeah,
do you have more? Or?
Yeah, no, I mean, I'll think I have one at the end, but go ahead.
Okay. Well, give me an answer on this, Mike. CapEx, asset investments. When people are coming to the end and they've accumulated every time at the end of the year, their accountant told them to go buy a shiny new truck, or they just shifted from leasing equipment to buying equipment. What advice do you have for these owners around asset management?
Well, I don't think how I look at that is this way. You have to have assets that are reasonably valued in comparison to their actual value. To go and buy an $80,000 truck and expect to get $80,000 for it, 6 months later when you sell, it's not going to happen.
Yeah.
And I think, so you got to look at the assets and they got to be reasonable. They got to be, they got to be able to produce the revenue that the previous owner has been producing. Mm-hmm. If they're tired, and I've been in situations to where I've looked at assets, and they say, hey, well, I've got X amount of assets, but I looked at them and they're tired. They're fully depreciated. They're fully used. They've been working, but in reality, a buyer's going to look at it and say, well, wait a minute, I'm going to pay X amount for that business. And then I'm going to have to invest, $200,000 in equipment or $100,000 in equipment or $100,000 in something. It could be computers. It could be whatever it is. They're going to add that. That's going to be part of their valuation process. I mean, I did it when I was buying companies for the major corporation that I worked with. I look at their equipment and say, you know what? I'm going to buy it for X, but I've got to spend $500,000 on equipment to order to produce the revenue that they had, because their equipment is, could be 10 years old or 12 years old, or just wore out. Yeah. So I wouldn't advise that client to go buy equipment, but just realize that the buyer is going to sit there and say, hey, I can't pay X because I've got to go spend $500,000 on equipment to modernize it to produce the revenue that you've been producing.
Yeah, get free cash flow, I think is kind of where you're going with that. Like, after network. Yeah. Well, I hear owners a lot say that. Okay, maybe I'll sell for that, but you don't get the equipment as well. But yeah, you do get the equipment if it's an asset sale, maybe different than an equity sale. But yeah, it's interesting how people kind of change. They buy assets going into a sale. I mean, on the one hand, it makes sense. You're keeping the value of the business up there and getting all the equipment you need. But I just wish owners knew that they're probably not going to get that money back, or the majority of it they're not going to get back.
Yeah. And that's why I wouldn't advise them to go spend a bunch of cash, cash to go out and buy capital that somebody else is going to devalue. I mean, that just doesn't make sense.
Which gets into proactive planning. If people are planning ahead for an exit, then they know when to buy big assets and they know when not to buy them. If they don't want to put off deferred maintenance. But yeah, a lot of people, it seems like they buy a truck and the next day they're like, no, I'll sell instead. And we have to be the ones to give them the bad news that they're not going to get that truck back. Although I have had people say, yeah, I paid $80,000 for that truck 6 months ago, but guess what? Now it's worth $150,000 because trucks are hard to find. I've had people go the opposite way. And it's like,
and that was true during COVID. That was true during COVID, but they're a little more accessible now.
Well, my position is I'm not a car dealer. I'm a business broker. Let's
right.
make money or not.
That's right. That's right. And that's really what the bottom line is what is that? What does that business generate? What cash does it generate for the owner? And that's, people don't realize it. It's the amount of cash that it generates. And then, okay, what's the reasonableness of it continuing? What's the risk factor?
Yeah.
Like I said earlier, if all the customer relations are with the owner and the owner's not going to be there, now that business is going to be devalued because the risk factor is so high.
Yeah.
And and I've done it when I bought companies. I would look at it and say, okay, I ask, who's the relationships with? Well, they're my relationships. Well, guess what? Thank you very much for being honest, because I'm not going to tell that, but it's going to devalue it.
Yeah. I was going to invite Mike to tell a story, Brian, but if you had any more questions, I'd love to.
It's just a real quick question. I'm just curious, Mike. So what if someone was doing a startup business and they wanted to back into a valuation? So, they're coming in with some partner groups or, and they have an idea or something or an add-on business. Is there a way to do a valuation it might be called something else. So excuse me if I'm being naive on this aspect of it, but can you have a valuation done on a business that's a startup? So, these big private equity groups like you've worked with or venture capitalists, they must have some idea of a startup, and they know that what they want the value to be, but is it kind of like a roadmap or a guide on the things to buy and to do to make it worth that much money at a future date? So is there a valuation that's kind of based on something like that scenario, or is it called something else maybe? Or
there is, but I don't do those types of valuations because the startups are difficult, because it's people will pay for a startup if they know they can create value. And there's a lot of venture capitalists, but they also know that when they invest in 10 firms, one's going to make it, maybe. Right. So they know that they've got to invest in 10 in order to get one to really hit the mark. And that's part of their analysis. I'm not that familiar with the startups. Typically I look at 3 years tax returns plus the current year, and so I'm doing a historical valuation based on past experience. And then I do look at, okay, what do you project, or some projections, and that does have a small impact. It does have an impact, but it's a small one typically, because a buyer is buying historical results, not future results. Because I've had a lot of owners say, well, you know what, if they do this, and this, it'd be worth this much more. I said, you're 100% correct. Mm-hmm. But because you didn't do it, they're not going to pay you, because for them to do it, why would they pay you for what they got to do?
Right.
And what they have invested.
I have a weird analogy. on that one, and I think Mike is right that it doesn't really, our world doesn't work like Einstein's theory of relativity. You know, when things are moving extremely fast or they're extremely heavy, they act differently in physics. Well, I think small business and M&A is similar in that it's differently valued. And M&A, like giant, huge businesses, the Ubers of the world that never, ever make money and people still put huge values on them, doesn't really work that way in Main Street or even lower middle market. It's all about the money that it's made until you get to really, really, really big businesses that are putting up.
Yeah. It's all about cash generated.
Yeah.
What cash do they generate? Because that's the return. That's the that's the return on investment.
Well, Mike, I wanted to, I'm going to invite you to share some plugs. I know I wanted to plug XPX, but I know we're right at 4:00, but if you had any stories that you'd like to share about valuation, I know we've done some valuations that were like, we kind of went somewhere, we kind of impacted somebody. I want to invite you, if you have a quick story that you like to share, to use this platform to kind of share how your work has made a difference in people's lives.
Well, I will tell you one, because it ended up to be a very good story. And I think you know this one, Neal. It's a story where I sat down with an owner at breakfast, and it was a good size company, and he had good EBITDA numbers, and he said to me, he says, "What do you think the value of my business is?" And I told him it's nothing. And he says, "Wait a second." He says, I'm at $5 million EBITDA. Well, how can it be nothing? I said, it's all about you and your brother. And I told him, I said, you know what? I did a valuation. Of course, it wasn't worth zero, but I wanted to get his attention because because it really is. It was about he and his brother. Yeah. And I said, and I did the valuation. And I said, you could make 10 million more in this business if you go out and spend $750,000 in processes and organization. And of course, he thought I was crazy, but he did. And in 2 years, he did it and created generational wealth. He said, I was just shocked that could happen. Never had the idea that it could happen.
Yeah.
Never thought that it could. So that was an interesting story, and it was a good relationship. And I still am working with him. Actually, I introduced him to another client that's interested in selling. So it was just an opportunity for him to buy additional businesses.
That's great. And it's also, most people don't listen. I've given advice to people all the time and they just don't do it. But the ones that listen, you get to see the fruits of their labor. That's extremely powerful. That's a great story, Mike. Thank you for sharing that. And if I'm correct, that gentleman shared his story at an XPX event. Is that true?
Yes, that gentleman did share his story at an XPX. He was down to earth. I know you were there, Neal.
Yeah. So what the heck is XPX? I think you're a leader in the community with this XPX thing. Tell us a little bit about that.
Well, XPX is the Exit Planning Exchange. It is part of a global organization with 18 chapters in the U.S. And it is a group of professional advisors that deal in exit planning. It could be brokers like Neal. You're part of the organization. I'm part of the organization. So you have coaches, you have CFPs, you've got CPAs, you got attorneys, you got wealth managers, you got investment bankers, you got commercial bankers. It's a group of professionals that deal with business owners, that help them build value and help them some sell and just help them understand what they really have in their business. And so and I was one of the founders of XPX, and it was kind of it was I came to Raleigh in 2019, knew nobody in Raleigh, and needed to build a network of individuals, because I'm not a CPA, I'm not an attorney, I'm not any of these specialties. I'm not, I don't have those specialties. I know enough to go and get the right people. Yeah. And that's what this allows me to do, is to bring in, and I've used quite a few members of the XPX with my clients, because they create value, and I can demonstrate that.
Well, speaking of creating value, I mean, you're somebody who creates value. I put your website up on the screen there, Business Value Strategies. Mike, Leannah, thank you for joining us today. I hope that the people watching got a lot of value out of this about valuations. I know I enjoy working with you. XPX is a great association. I know we do a lot of business with it's about advisors and people that are in that or are focused on sharpening the saw and networking with other great advisors to help their clients with. So thank you for spearheading that initiative in our market. I feel so proud to know you and to work with you. And I think this was a fun conversation today. Thank you for being here.
Thank you very much, Neal. Thank you.
All right. Well, ladies and gentlemen, that's it for today. This is Neal Isaacs on behalf of Brian and Mike signing off.
Thanks, Brian. Thanks, Neal.
Have a good day.
Have a good day, everybody.
All right.
Bye-bye.
See you. Thanks.